Communication Work Session in order, Monday, November 4, 2 p.m. Okay, we'll take them first at that point. Present, we have board members. I think all board members. All board members are here with the exception of Dr. Irwin, and he's on his way. Our superintendent of schools is present. Discussion items, state audit report. Dr. Bell or Superintendent Thurman.
Thank you, Mr. Chair. Ladies and gentlemen of the board, I would like to turn the agenda over at this point to Dr. Bell. We have guests here from the State Department of Audits who have worked very closely with us, and prior to turning it over to Mr. Bell, I want to say to Mr. Freeman and to our auditors, I want to thank you all for the work that you did on behalf of the state and on behalf of the DeKalb County School District. The work was done, I think, at a very high level, very professional level, and it's the information that you provided will help us chart the course to restoring fiscal stability to our district. And I'd like to have you with us this afternoon. Dr. Bell.
Thank you, Mr. Superintendent, Mr. Chairman, Dr. Johnson, board members. We have with us today Claire Arnold, Brad Freeman, and Jennifer Thomas of the State Department of Audit and Accounts. And they're here to present the FY2012 audit. Just keep in mind that that is a time period from July 1, 2011 to June 30, 2012 that they will be discussing. With that, I'll turn it over to the state's audit team.
Okay, thank you. We have some folders to hand out. When you kind of get those folders, we'll go over the contents.
Thank you.
In the folder, you have an agenda, and behind that agenda is 3 pages. Behind that agenda, you have an audit report. The first tab that you see on the audit report will be the opinion letter. We'll kind of discuss that briefly. The second tab you have in the opinion letter will be the yellow book letter, and we'll discuss that as well. The third tab is a single audit letter. And the fourth tab are the current year findings that will be presented within the report. We'll go through those. The next tab is a management letter. That's a letter that's presented to the board and the superintendent for things that didn't rise to the level of finding. And the last tab you have in there is significant adjustments that were proposed and made to the financial statements and uncorrected immaterial misstatements that were presented to the financial statements.
Everything's in there. It's just missing the
First, I'd like to take a moment to thank Dr. Bell and his finance team for getting us through this engagement. We look forward to working with you guys again next year on the 2013 engagement. In the engagement in the agenda, we have the first 2 items on there is management's responsibilities and auditor's responsibilities, and we kind of want to take a moment to talk about that a little bit. Management's responsibilities is for the financial statements themselves. They're responsible for the financial statements, and that includes the basic financial statements, the notes of the financial statements, any required supplemental information in there, your budget statements, that is management's responsibilities. All we do, our responsibility is to audit those financial statements to see if they're fairly presented in all material respects. And we say all material respects is because we don't look at everything at 100%. It'd be cost prohibitive to do so. So we set a materiality and we audit based on that. We let that materiality drive our scope of the engagement. And we do testing by targeting on risky areas, sampling, analytics. Those are the methods that we do to audit your financial statements. We also, during the engagement, we do gain understanding of your internal controls, but I just want to be clear about this. We don't give an opinion on your financial internal controls. We don't audit your accounting process. We're not out here to give an opinion on internal controls. We're strictly to give an opinion on your financial statements, whether or not they're fairly presented. In addition to that, we do audit your major federal programs. And when we audit those, we do give an opinion on whether or not DeKalb County School Board materially complied in all material specs to those major federal programs. We also, if anything comes to our attention, we will report those deficiencies that come to you, that come to us. We report those deficiencies to you guys. So that's related to any internal controls, any laws or policies, grants, and regulations, any non-compliance with those. We will report those to you guys, but we do not give an opinion on those as well. So real quick, we just give an opinion on your financial statements and your major federal programs. Everything else we will report to you as it comes to our attention, but we're not giving an opinion on that. It's more of a negative assurance.
Mr. Freeman, for the benefit of the board, would you like us to hold our questions till the end of your presentation, or feel free to ask whenever, just from a process standpoint?
I'm okay with questions whenever y'all have them, I mean, if they come up. Okay. For our opinion to the financial statements, and this is the most important information that we're going to give to you guys, the financial statements were unqualified. That means they were materially presented, and that is a good thing. So that's the most important information that we're going to be able to provide to you guys today. The other two letters, and that's your first tab on there, the opinion letter, that is your opinion to your financial statements. The second tab is the yellow book letter, and in this letter we're reporting on any control deficiencies, whether it be a material weakness or a significant deficiency, or any non-compliance with any laws and regulations that came to our attention. We're not giving an opinion on that, but we will report that to you if any comes to our attention.
I'm sorry. Can you repeat that for me? Because I'm thinking about internal controls and that they reflect up in the financial statement. So can you repeat what you just said a second time?
In this letter, we report on any control deficiencies that come to our attention, whether or not they be significant deficiencies or material weaknesses, or any non-compliance with any laws, regulations, or contracts that come to our attention. We're not giving an opinion on that, but we will report those that come to our attention. A significant deficiency is a weakness in internal controls that would prevent correction of a misstatement to your financial statements in a timely manner, detection or correction. We did note 2 material weaknesses this year that's reported within this letter. And you see it's in your findings if you flip back your 2 tabs.
Excuse me, Mr. Freeman. When you said this year, you were actually referring to FY2012 that ended in June 2012.
Yes, sir. For FY2.
Not this year. All right.
Thank you for that clarification.
Prior to this board being sworn in.
Right.
Prior to them hiring this.
Right. Absolutely. The 2 findings is related to, the first one's related to budget preparation and execution, and the second finding is related to internal controls overall, your accounting procedures. And that is for 2012. The third thing that we report on is material compliance with your major federal programs. For 2012, we audited your child nutrition cluster as a federal program, your education technology state grants cluster as a federal program, your special education cluster is a federal program, your Race to the Top incentive grant is a federal program, and improving teacher quality state grants is a federal program. That is page 1 of the the 4th tab. If you look at the 4th tab.
It's clear.
Yep, clear tab. Yes, ma'am. Yes, ma'am. We good? Okay. Those were our major federal programs that we audited. We do have a qualification to this letter, to your yellow book letter, single audit letter. We did find a material noncompliance related to the education technology state grants. All other major federal programs that were audited were unqualified. And we do have a finding associated with that as well. And if y'all don't have any other questions, we'll talk about the findings.
Yeah, unqualified is a good thing, though, right?
Unqualified is a good thing. The qualification is, I guess, needs improvement.
When you talk about weakness in internal controls, in particular, the old stated, I guess, account balances, is there a concern with us in that the financial statements were severely impacted? I know you said it's an unqualified opinion. I do know that's the best report that we could receive. But is there a real concern with the financial statements being adequately presented?
No, sir. All significant adjustments were corrected. Only immaterial, uncorrected misstatements were noted. And as far as the ending balances goes, we feel like they are fairly presented.
When we talk about internal controls going forward, I know you say you don't render an opinion on internal controls, but is that an internal audit function? Is that an external audit function?
It can be either. Internal, you wouldn't necessarily get somebody to give an opinion on your internal controls. It'd be procedures that you would agree upon with, or you'd get your internal audit staff to do. You could contract for an external audit over your internal controls to give an opinion over your internal controls. I would recommend getting with the internal audit staff and doing more of a risk assessment process internally before you went to that step, because there's a lot of work that needs to be done before you get to auditing your internal controls. And just to begin with, documenting internal controls, assessing whether or not improvements, getting the procedure in place when you're continually monitoring those internal controls, and eventually where you guys will end up testing those internal controls. DeKalb County would be, if you're considering a spectrum, you guys would be in the infancy stage of internal controls. But you got to keep in mind, there's been a lot of turnover within your staff. So you're getting new staff to come in, and if documentation wasn't available with that new staff coming in, they're starting from ground zero. So I wouldn't necessarily recommend at this point getting an audit on there, because I think if you would talk to Dr. Bell, if you would talk to your superintendent, they could tell you kind of the condition of the internal controls right now and where they're at, and I don't think it would warrant an audit.
And I think for Dr. Bell and for the superintendent, so much of what we do as a board is based on the financial statements that are presented to us. So a peace of mind that we could all have from board members is that the controls function properly. And so that's something I guess we'll be looking to Dr. Bell for and the superintendent for guidance and just some comfort level that the process works as it is intended to work.
Okay, fourth tab, clear tab. Start the findings. The first findings related to budget preparation execution. We noted that the school district reported a unassigned fund balance in their general fund of $13.9 million for fiscal year 2012. And what that means basically is the money that's left over to spend on general operations that's not restricted for federal programs or not restricted for your or not to be used for inventories or your school activity accounts committed to those. What's left over was in a deficit of $13 million, $13.9 million. In addition to overall general fund balance, reported a $2.4 million deficit, and that was at the end of 2012. Of approximately, if you want to put that in context, it does sound like a big number, and it is a big number, but if you want to put it in context of overall general fund, it's just over 1% of general fund expenditures. So put it in context a little bit. It sounds like a humongous number, which it is, but it's it's just over 1% of your general fund expenditures. So as far as correcting that deficit, it certainly would be doable in 2013 if the steps were put in place, and hopefully they were from what we're hearing and what's been reported to GDOE, it has been. As far as the change in fund balance for 2012, fund balance decreased $56.3 million in 2012. So obviously the major concern that we have would be going forward, if you want to talk about internal controls, the monitoring of that budget. And the biggest weakness that we saw, and I don't think it's just us, the community, everybody saw it, was that budget over expenditures were reported to the board on a monthly basis by DeKalb County Finance. However, the follow-up, the correction of those over expenditures wasn't necessarily being implemented. So, take that kind of serious. Is when the finance committee is giving a budget to actual report, flip through it, you see over expenditures, question it. It's not enough just to question it. You got to make sure that things are being followed up on and corrected, and that's really kind of the nuts and bolts behind this first finding. Things were reported to the board, so it's not necessarily that the board wasn't well informed, just follow-up wasn't there. Any questions on the first finding? Okay. The second finding is related to your general accounting procedures. And there's a lot of detail here as far as adjustments that were necessary and reconciliations that weren't necessarily timely and stuff like that. What I want to focus in on is the cause section. If you flip back to page number 4 under the cause section. In discussion with management, the school district did not have an adequate succession plan in place related to terminations and or departures of several key financial and accounting professionals. Your accounting staff leaves. The accounting procedures aren't well documented. The processes aren't well documented. Positions are left unfilled, or duties are moved to other people that may not have time to get all their jobs done. If you do that, they're going to get the things they're going to do what's necessary to keep the ship running. Well, doing a reconciliation or making sure an account is accurate isn't keeping payroll going out the door, or keeping accounts payable going out the door. That's what they were worried about. So all the internal controls associated with your accounts, when people are overworked, when there's not enough staff to get the job done, that's what they're going to focus in on. They're going to focus on getting checks out the door. They're going to focus on getting payroll out the door, not account balance reconciliations. That's the nuts and bolts behind this finding. So correcting that it's going to be tough to do as far as when you get a new accounting staff in there. They're starting from ground zero now because things weren't necessarily all documented well. So they need time to get things up and going, and they need personnel to get things properly assigned to qualified staff. And I want to emphasize the qualified staff aspects of it. You've got to have qualified accounting and financial professionals. If you want good information coming to you as a board member, you want to have a qualified accounting staff to be able to process that, to have accounting controls in place in order to get you that monthly budget actual information that's going to be accurate.
You're saying that we need to have adequate staff that can actually handle the situations as they arise, and making sure that they can fulfill whatever needs are there in order to keep this budget going the way that should be going.
Need adequate staffing levels and adequate staff, adequately trained staff. Yes, ma'am.
Okay, thank you.
Just, well, I guess one clarifying question, I guess. Based on this last part of the conversation, even though this is the internal controls weren't assessed, if you will, if that's a correct statement, that's not an indication of the health of the financial department. And in fact, this finding actually indicates that there may be ill health in the financial, in the controls process by virtue of the people that are managing it.
Well, let's be clear. I'm not pointing fingers at people.
No, I understand that.
Okay.
But I meant in terms of staffing.
Staffing levels, yes.
Right.
We did assess internal controls. We didn't give an opinion over internal controls. And during our the process of gaining understanding of internal controls in order to be able to plan and perform our audit, these deficiencies came to our attention. And yes, when they come to our attention, while there's not an overall true picture of the entire scope of your internal control structure, your control environment, control activities, et cetera,
Right.
it is a sliver of something that we discovered when we were coming out here.
Right.
But I just don't want to say that it's not assessed. Yeah.
Can I follow up on that? My impression was, you did report out, I'm not going to use the right language, on several deficiencies in internal controls. That's my interpretation of it, in places where we can improve our internal controls. But my impression was you also stated that management agreed with the assessment across all of those dimensions. Is that correct? There was a reconciliation where management essentially agreed with the assessment of the auditors, and I believe we also demonstrated that we had taken significant measures in several of those control categories in the time between the end of 2012 and current date. Is that correct?
In management's responses, which is attached to the audit report, of the 3 material weaknesses, management concurred in every case. Yeah. And we listed specific steps that had been taken that we feel substantially better the situation that's being observed on within July 1, 11, and June 30, 2012. Please keep in mind that's what we're talking about right now.
Dr. Bell, are we at proper staffing? Well, proper is not the word. Are we at the ideal staffing level for your department?
Oh, no, sir.
How many vacancies do we have?
Well, it depends on how you measure it, but I think I could certainly benefit from between 4 and 6 additional people in the finance division right now. We're not at the ideal by far, but we're making progress. Since this report, this time period of this report, we've hired a budget manager. We're in the process of hiring a new budget analyst. We've hired a grants analyst. We filled the accounting manager's job. We filled the capital projects accountant's position. So, yeah, there have been a lot of steps. We've initiated the chart of accounts. We bought new school-based software for all the schools. So we've taken a lot of steps that puts us in, I think, a better position than when this report ends as of June 30, 2012.
Thank you.
But what I seem to hear you saying that you're in a better position, but not in the ideal position where you can actually be able to perform at the capacity that you really need to be able to perform, and for finances is concerned.
We're not in an ideal spot, no, ma'am.
So we're going to have to begin to look at that. And I guess when we ask for more and keep asking for more, that taxes on you all even more to try to produce because of the fact that you still have to run that office and then trying to provide other things that maybe you don't have the staffing capacity to be able to provide that. So we're going to have to begin to look at that.
Under Mr. Thurman's management, we get timely notification to be able to provide the answers.
Well, I want to say, even with the limited staff, I thank you and your office and your staff for what you all have been doing. I think you all have been doing a wonderful job, given the constraints that you do have.
Just one other clarifying question. So when you say staff, by the way, that could be both the combination of the personnel as well as the tools that they need to execute. Is that a fair statement?
I would say so, but I would want you to look to your management to determine adequacy of tools and staff. But from our perspective, yes. I mean, what we would like to see, you know, obviously if you have accounts payable process, you have accounts payable module to keep your detailed information about those accounts payable. You know, those are the things that we're seeing as an overall infrastructure that's lacking.
Correct.
And we really won't have time to get into all that, but obviously if you want to talk, we can get into the details of what we see, but I wouldn't want to talk about that without Dr. Bell informed.
No, and I appreciate that, and we wouldn't have time to do that, but it is good to know that there is more detail to help us target where those resources where we could benefit from improving those resources, both personnel and tools.
Okay. The third finding starts on page 5 of the schedule of findings and question costs, is related to the technology state grant. This is the federal program that we gave a qualified opinion on, and it's related to grant management. And this also speaks to the training of staff, the quantity of staff, the quality of staffing, performing the job. Related to this grant, if you flip to page 6 in the cause as well, the administration of the EdTech grant was not adequately planned. Kind of speaks to the problems here. If you have this EdTech grant and you have other grants, other federal grants, those grants have to be tracked separately. Each grant has a separate budget with certain expenditures or certain programs that are only allowable by that approved budget. And in a case where you don't have adequately trained staff, or you don't have adequately prepared staff, or you just don't have well-defined accounting procedures in place, or those accounting procedures are assigned to someone that's not an accountant, things can happen where those funds get commingled and it takes time to figure out what's going on related to those grants. That's what's happened with this grant. It's since been corrected. Everything's fine with it now, but that's what's wrong with this third finding is related to that. The adequate planning, going up front, establishing a budget, establishing a system of accounts to track the grants, a system of procedures to identify expenditure to be charged and reported to GDOE and so forth. Those are that's our federal finding related to 2012. Any questions? Okay. If you flip to the next tab is your management letter. In the audit report, we report deficiencies that are considered significant deficiencies or material weaknesses. If those items don't rise to the level of a significant deficiency or material weakness, we report those as a management letter comment or a verbal comment, exit conference comment. We did have a couple items to be reported in your management letter. A couple of these are continuing, they're repeated from the prior years. The first one's related to your accounting controls overall. We came and did, as part of our audit, we assessed IT general controls and we actually tested your IT general controls related to your terms system and your school food point of sale system. Within both systems, we found weaknesses in your logical access, your change management, and your I see it's just your logical access and your change management. We found weaknesses in those two areas related to your IT general controls. Those deficiencies have been reported in a separate letter. We consider that information confidential because if people knew about those things, they could take advantage of it if it weren't corrected. My understanding is that those items have been either addressed or currently being addressed. So we did find some weaknesses into your IT general controls.
Okay. One question as it relates to the significance of the management letter.
Yes, sir.
And you mentioned that there were some things that are in the letter that were reported before.
Yes, sir.
This is really a two-part question. What would be the next step or the escalation, if you will, from a management letter? Where does it go next? And how, and within that answer, how well do you think the steps that we took in the interim, the hiring, some of the hirings that we made to address some of these, how much does that actually mitigate the prospects of that escalation?
As far as an escalation goes, we're just a reporting entity, our agency. We just report to you guys. When we evaluate a deficiency in internal controls or a non-compliance, we evaluate that on the impact of your financial statements. And if things aren't corrected or aren't addressed, we'll evaluate that in itself, not necessarily that deficiency again. We'll evaluate whether or not that the lack of taking corrective action steps is a deficiency amongst itself.
Okay.
So there won't be an escalation of that particular deficiency. We'll evaluate the lack of corrective action taken. For this particular, we have not, let me make this clear, we have not reported something to DeKalb County Board of Education that we have not at least felt like that they're taking steps to correct items. And that goes back for several years. We haven't felt like we reported something to them. Now there's been cost prohibitance where they could not, because of budgetary restraints or whatever, do the things that they felt like they needed to do. Hiring additional staff, implementing accounting software that may be more up to date or meet their needs, or improving, I shouldn't say purchasing a new one, but improving the accounting software to meet their needs. I mean, those are costly things that can't do everything, obviously, because the costs associated with it. But everything we've reported to them, they at least put some sort of corrective action in place.
Mr. Chairman?
Dr. Bell.
This is in response to Mr. Mayfield's question also. To give you an idea, Mr. Freeman said that in the management letter in front of you, there are a couple of items that they've observed before. When I got here as the head of internal audit, I worked with the 11 management letter and financial results report. And my memory is by the time I finished writing the compliance plan, which was accepted by senior management, I was over 20 observations, okay? So looking at what we have here, we think that's a substantial improvement. And if you look at that document, I interviewed folks and laid out a timeline and named the responsibility as to what we needed to do to move forward in that area, and I periodically review that with my staff and staff of other departments, okay? And keep in mind one thing. When the management letter says management, capital M, they're not just talking about the finance department, okay? That's true.
Mr. Coleman.
So I just had a quick question, I think, because we're on the management response now, it feels like, for Dr. Bell. Look, I think we've made a lot of progress actually against each of these three control issues that they outlined here. My question would be, over and above this, beyond the accounting practices and staff we put into place, what are some of the most important areas in which you feel like we need to progress now? I know these are from the FY2012 cycle, but where do you think we need to continue pushing on the control side in order to make sure that we're continuing to evolve our process?
Well, as y'all have heard me say before, I think we really need to beef up our accounting software and to put in place a serious encumbrance system where you vote on something on a project for $500,000-$600,000, that finance has the capability to encumber that item and track the expenditures against it. Under the present structure, and it's not a new thing, it's been this way for a number of years, the department that gets your permission to spend that money, they put in a requisition that rolls to a purchase order, and they sort of are responsible for not overspending or controlling the expenditures against that project. It's not the finance department that's responsible here. In my previous CFO positions, I had controls where I could stop money going out the door, okay? So we don't have that sort of centralized control right now, and that sort of relates to our present legacy accounting system, and y'all have heard me comment about that. I need additional experienced staff to be able to move us towards monthly reconciliation. Okay, in a lot of areas we don't do that. We try to do it quarterly. We certainly do it by the end of the year, okay? But Mr. Freeman has been telling us that in a perfect world we would reconcile our areas monthly. We tell Mr. Freeman realistically a lot of big systems don't do that, okay? This concept of internal control, there's an economic return concept in it. If we had a school district of 1,000 employees and 600 auditors, you'd have great internal control, but you wouldn't be getting much bang for your buck. So you got to kind of balance the number of audit and control positions you have against your mission and your overall financial situation.
The second management letter comment is the business continuity plan. This is a repeat from previous years. This is if you think about it, if a disaster struck, this would encompass how you would meet payroll, how would you meet your AP, how would you teach, children if a school just ceased to exist, whether or not it's a tornado or whatever. How would you get textbooks to those children? How would you get pencils, feed them, if it's something happens to central office? How would you get payroll? How would you get, AP? All that stuff is a business continuity plan. And there's bits and pieces, obviously, that's, they know how they're going to meet payroll, they know how they're going to meet AP. I'm sure the instructional side knows how they're going to teach kids, and that. But the plan all together, wrapped up all together, contact vendors for a system this size. How many computers would you need if a school ceases to exist? How many, if the central office system is, how many computers? Where's your vendors? How would you get? What kind of time frame would the vendors need to, could they get it to you in 24 hours, 48 hours, a week? All that stuff needs to be assessed and documented in a well-defined plan. That is a major undertaking somewhere where we want you guys to get to that point where you're able to have a complete business continuity plan in there. Like I said, there are pieces of this that have been considered and that are in place, but an overall system-wide, not just finance, we're talking instruction, finance, operations, compliance, the whole thing, into a single plan. Currently, I don't think you have the resources necessarily to take on a project like that, but we definitely want you guys to be looking forward in the future to start addressing some of these business continuity plans, because that's the last thing we want to see is something like that to happen and you guys not necessarily have a well-defined plan in place. The third management letter comments related to school activity accounts. This is a controlled or a comment that we've noted in the previous years, and this is one that speaks directly to staffing levels and cost benefit. You're not necessarily have the staffing level of the school to have, I guess, segregation of duties on every front. That's a kind of a common thing that we see when we go out to school activity accounts. Your internal audit staff points them out as well to you guys. But we did find some areas where there was, people had access to cash and they still made journal entries or post things to journal ledgers, and those are segregation issues. That's a common thing that we see. But it doesn't matter if we think it's common or if we report it to you in the past, we're going to report it to you again and let management make the assessment whether or not y'all need to, or how y'all address it. The fourth management letter comments related to agency funds. Most of your agency funds are related to your school activity accounts, where the French club or a field trip or something may be classified as an agency, which that really means that the school is holding that in custody in a fiduciary responsibility for somebody. What we would prefer to see is that you have an agency fund agreement in place to where it defines what the money is to be used for. Say if it is a field trip, there is money left over, what do you do with the money after that? It's a protection document. We would recommend that agency funds be placed, or agency fund agreements be put in operation. The last management letter comments related to your purchase card transactions. We did know a few items related to your purchase card transactions. I do want to note here that when we did P-card testing, we did anomaly testing. So we went in there and we looked for things that looked odd, and then we focused our testing on those things. And these transactions are a result of targeted testing. There's not a whole lot of items that came to our attention. We didn't consider a significant deficiency or something that we should report in the, as a finding in your audit report. That's why we'd see it here as a management letter comment. Overall, we felt like there were pretty good controls in place. We didn't find a lot of exceptions with your purchase cards. That's your management letter comments. The last tab that you guys have are your significant adjustments and uncorrected immaterial misstatements. Now, we do present these to you guys, but we usually don't go over each one of those in detail. We usually just hit on the high points if we see something that is specifically alarming or something. There is nothing of that nature here. These are common adjustments. They're due, a lot of them is due to the reconciliations that your staff, or the staff here was performing, that were noted after financial statements were submitted. The uncorrected immaterial misstatements related to things that affected prior year balances, so they didn't want to make the correction because it would require restatement. So we didn't really see anything that alarming, but then again, we are a reporting agency, so we do want to bring that to your attention that there were some adjustments and some uncorrected misstatements to the financial statements. And I do want to emphasize, when we talk about adjustments and misstatements, that is a common practice in reporting financial statements. It's not uncommon to have adjustments. It's not uncommon to have misstatements. Obviously, to Dr. Bell's point, if you have that 1,000 staff and those 600 auditors, you could have a perfect set of financial statements, but it's going to be too costly. So misstatements are a common function with financial reporting. That's all I have. Is there anything?
Any further questions? Mr. Mayfield?
Yeah, I just had one final question, I guess, and this sort of deals with, how do you finance or fund the correction of these deficits, if you will, in terms of what you found. And maybe this question should be directed to Dr. Bell, and that is to find out whether or not there are items in the letter or in the audit that, if uncorrected, even if it's because we didn't have the funding to do it, could trigger any potential sanctions, and or whether or not there was a way to assess the liability or the risk that we face, the financial risk that we might face, if we don't make some critical corrections at some level.
Yes, sir, Mr. Mayfield. Let me just say the news that Mr. Freeman began discussing of the deficit situation, y'all have heard us talk about. We got put on a deficit elimination plan by the state because our DE 46 filed for 12 showed a negative 14.4. The analogous number, I think, in the audit in front of us is, to give you an idea how these things move a little, is 13.9. So if you go back in the findings of the first material weakness, it shows that deficit in 12 being 13.9. So it was a little bit better than what we thought back in 12. And you have heard me say that that negative 13.9, which was 14.4, when we filed the DE 46 this past October 1st, that number is now a positive 10.8 million. So, and you've also heard us heard us say that how during 13 it appears we collected $26 million more than we spent in the general operating budget. So that 24 or 26 million has overcome that negative 14.4 and put us 10 plus to the good. Now, state officials will tell you, well, when do they realize that? It may be when we finish the 13 audit. Okay, maybe it'll be before, but I have the letter that we sign every month here ready for y'all to sign. The superintendent's already signed it. So there certainly is substantial evidence that things have improved, okay? But in terms of, liabilities if we don't correct, what you have here, Mr. Mayfield, and I think you know this, is these underlying liabilities relative to staffing issues. And we can get penalized or have to send money back and that type of thing. It's not necessarily in the audit itself. I think we have, turned around from the negative situation. Y'all were very diligent in adopting a balanced budget for 14, and every month you dig into the financial reports and we show you how we're collecting and how we're spending, and as areas crop up you ask questions about them and that type of thing. So I think we're on the right track. Clearly you cannot adopt a budget that has less anticipated revenues than you have your appropriated expenditures. And that's sort of where we are, but and so I think we're making substantial progress. I was pleased to see this management letter, which had 4 or 5 observations, because when I got here as the auditor, I was working with a document that had 20 plus. Okay, when I took over CFO of the City of Atlanta, it was 76 observations in their management letter. 40-something of them were recurring observations. So I think, this is a good report card in a lot of respects. We do have some areas to improve upon, and we're going to do that.
Mr. Chairman, if I may, I want to thank Mr. Freeman, Ms. Arnold, Ms. Thomas, again, for your work. It's going to be very helpful for the administration, obviously for the board, to chart our course forward. One thing, if I can, Mr. Chairman, this report does something else. I think it states very clearly there's been a tremendous amount of discussion about the bloated staff at central office, and as it relates to finance, I think it provides uncontrovertible evidence that what we have been operating under when I came was basically a skeleton staff. It made it all but almost impossible to do this work. And I want to thank the board for the budget to begin to rebuild this particular function and others that impact this. And we are moving in the right direction. And, I've been accused from time to time of being too optimistic, but we're off life support, but we're still in the emergency room. We're still in ICU. And the only way we're going to get this done is we have to be very careful about decisions that we make that might have impact on the fiscal stability of this district. We have little or no room for error, and I think our auditors will speak to that. Dr. Bell mentioned the $10 million fund balance. I've been taught, and I know the auditors agree, that what's needed is about $60 million. So we're operating a $1.2 billion operation with a $10 million surplus, which is almost, you can't afford to be wrong on any issue. Thank you, Mr. Chairman.
Thank you, Mr. Superintendent. And again, Mr. Freeman and your staff, we, as a board, we appreciate the audit.
Dr. Johnson. Yeah, I just want to make one last statement. Most certainly we thank you all and Superintendent for our efforts, because we're not actually sitting around pretending that the elephant is not in the room. And as he said, when you're operating off a shell, we've got to figure out how we can actually fill the void and those things that need to be put on the inside so Dr. Bell and his staff can do what they need to be done. And I want to sort of piggyback on what the superintendent is saying. When we look at education, we've just got to begin to look at education in a different manner. This is an organization. It's a corporation. It's a business. And so we can't half run it the way we would if we were in a corporation, we have to think of it the same way. We have to look at the top. We have to look at the staff, and we have to look at providing the appropriate staff who can be able to do the job that needs to be done. And so I most certainly would like to say to my fellow board members is that we most certainly have to begin to look at and appreciate the people we have and look at what we can do to engage and get them the best of what they do need to have in order to do a better job, to go from good to better to being their best. And the only way that they can do it is to have those at the top that be able to do that. And we can't keep looking at the fact that we're saying administration is heavy. If you don't have those administer, then it can't trickle down for those who are at the lower levels to be able to be in a better than they can be. So I would like to say to my fellow board members, we've got to start thinking in a different manner, seeing education is different, seeing what our charge is different. If we want the best for our boys and our girls, we've got to look at what can we do to make sure the top is strong so the rest of it is strong.
Thank you, Dr. Marley. Mr. Superintendent, if you would see them out, because you are the next item on the agenda.
Thank you all so much for your time.
Yes. With that in mind, we'll take a 5-minute break. We'll be back in 5 minutes.